Hello, everybody. This is Toni Turner, and welcome to the market now as of about noon Eastern on Friday, August the 11th. Well, U.S. stocks indexes opened higher today for the first time in 4 days after tepid data pointed to benign inflation that could make the Federal Reserve cautious about raising rates again this year. That happened even as concerns have been lingering over rising tensions between the United States and North Korea, and we'll talk about that more in just a moment. So now let's look at 3 charts that could give us some insight into the week to come. First of all, as we normally do, we're going to look at a daily chart of the S&P 500 SPDR, the SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 index. We use the SPY because number one, you can trade it, and number two, because indexes themselves are not traded, and with the SPY we can see volume. That's down in the bottom scale on this screen, and volume can tell us a lot. So that is one reason we use the S&P 500 SPDR, again, symbol SPY. So the SPY made an all-time closing high recently. On August the 7th, it made that closing high at $247.87, which is about $24.78 on the S&P 500 itself. We're just making new all-time highs constantly, it seems, in the last month or so. Since then, however, as you can see, the SPY fell down below the red line, the 20-day simple moving average, down to the green line yesterday and today, which is the simple 50-day moving average. When I captured this chart, the SPY was trading at $244.50, or about $24.45 on the S&P 500 itself. The cause, we were pretty sure of most of the fall was or is the situation with North Korea. Of course, as we know, earnings season is slowly coming to an end here. And also the market many times likes to rest in August. It's been moving up and making all-time highs now for such a long time. It only makes sense that at some point it's going to take a little rest. We see the 200-day simple 200-day move simple I'm getting mixed up here. We see the 200-day moving average down here coming up at about 234. Now we see the RSI here has fallen just like the SPY has and is down now, getting close to oversold territory. The MACD line is breaking slightly below the MACD signal line is breaking below the MACD line, as would be expected with this price fall. Interesting here, what I want you to see though is note this big red day yesterday on the SPDR. It closed below the 50-day moving average. Note with me down here the volume on yesterday's trading activity. It was quite notable. So when we see price falling on high volume, that definitely means it's a distribution day. And just so we want to pay attention to that. Now, again, that came down below the 50-day moving average. The 50-day moving average is considered a pretty key support line if price is trading above it, and a key resistance line when price is trading below it. And as we can see on this chart going back to the first of the year, there's only been a few times that the SPY has drifted below the 50-day moving average, right here, and when it has rebounded sharply, staying above that line. Now we need to see in the coming week if the S&P 500 can stay. Can it rally back up over this 50-day moving average, or is it going to need to take a little summer rest here, as the indexes do many times in August? Does it need to pull back down here closer to 240 on the SPY or about 2,400 on the S&P 500 index? So we will have to wait and see what happens next week, especially with the situation with North Korea. Do keep this distribution day in mind here that you can see, and maybe, just maybe, Some of us have profits that we need to take a little off the table. That way we'll have some dry powder, as they call it, to look at new opportunities. Okay, our next chart today is going to be a daily chart of the iShares Russell 2000 ETF, the IWM. As you all know, especially in Tony's Market Club, we watch the IWM closely for clues of broad market direction. As I've told you before, the iShares Russell 2000 ETF, which follows an index of small cap companies, has the power many times to lead us out of a bear market or out of a bull market, or to lead us into a new bull market. Sometimes we call it a leading indicator, and that sometimes if the IWM shows weakness in a strong market, as it's doing right now, that could tell us that the overall market is due for a slight retracement. Just so, if our market was trading down here and we were trading near lows, the IWM has the power to pull or act as a leading indicator for the broad market to start it back up into an uptrend. Now, when I captured the IWM today, it was trading at $136.36. And what we see here is another day I want to show to you. Back up here, we had an all-time closing high on July 25th, and at $144 and change. And then after that, we had what we call a reversal day. And if you can see this red candle that followed the green one, the red candle completely engulfed the green candle behind it. And when this happens on a move up, sometimes we call this an outside reversal day. Certainly it can provide key resistance, especially if it happens on pretty strong volume, as it did, as you can see down here. So at that point, the IWM has been tumbling really since July 26th, 27th. It has been falling pretty hard. It was like, all right, I give up. Now I need to rest. It fell quickly below its 20-day moving average, its 50-day moving average, tried to rally back up above that, couldn't do it, and fell down in this past week, down to where we see it here at the 200-day simple moving average. Now again, when I captured the chart today, the IWM was trading right on the 200-day moving average at $136.36. So now our question is, to remain positive, the IWM needs to rally off this 200-day moving average next week and remain above that line. And that would also be positive for the broader indexes, for the broader market, for the S&P 500. It would be positive for the QQQs, the tech stocks. So we have to see what happens next week. If the IWM can rally off this 200-day moving average, that would be a good thing. If it cannot, if it has to move further down, then we need to watch closely. We certainly have support here. We've been watching for a long, long time that comes in, if I could draw a straight line, right around 133, 134, and that is more key support here. We definitely need the IWM to stay above that. So we had this big disbursement day here yesterday. We can see the volume here and how it happens. So let's see now what happens into next week. Again, it would not be a real bad idea here to maybe take some, if you have some really nice profits on some positions, maybe to pull a little bit off here again, so you have some cash to use for the opportunities that will be coming up as soon as this retracement is through. Okay, our final chart for today is the SPDR S&P Aerospace and Defense ETF, symbol XAR. The XAR came up here recently and made an all-time high up near 76, about $75.75. This is at an all-time high right now, but I like the XAR and I like its price pattern. This happens to be the XAR Again, the Spider S&P Aerospace and Defense ETF is an equal weighted ETF. It means that all of the components in it are very close to having equal weighting. The index industry exposure goes across large, mid, and small cap stocks in the aerospace and defense industry. Some of them, or most of them, you're going to recognize, like Boeing, Rockwell Collins, BWX Technologies, Raytheon, Orbital, ATK, and so forth. I like the way the XAR is moving up and has moved up pretty well even since the beginning of the year. It does a pretty decent job most of the time of staying above the green line, the 50-day moving average. It's actually consolidated here from March, drawing this straight line again. It actually consolidated here from March through May, then came back up in a gentle move up, but now seems to be taking off a little more, which of course makes perfect sense considering the situation we have with North Korea. So as long as the XAR remains above the green line on my screen, the 50-day moving average, I've also drawn a short-term trend line here, which pretty well matches up with the 50-day moving average. So that's two areas of potential support here for the XAR. Again, today it's trading at $74.44, just above its 20-day moving average. Should it be able to stay here through next week and stay above the 50-day moving average, which is coming in right now at just a little over 72, should it be able to stay above this line, I would be interested in acquiring a modest amount of shares of the XAR, especially while this situation with North Korea is still going on. Even if that, please, nothing happens there, still this looks like a pretty good, I know Boeing's been doing tremendously well lately. This looks like a nice chart with a nice gentle rise to it, again, as long as price remains above the 50-day moving average. If for any reason price falls below that line, I would be out of the trade. Okay, and now on to next week's economic reports. But first, please join us this coming Monday, August 14th. It's a great way to find out what's happening in the market and what you can do next to protect your capital and to see new opportunities. In Toni's Market Club, we'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, please go to tonysmarketclub.com. Okay, as I said before, earnings season is tapering down. We will get Walmart reporting next week as one of the last retailers, as that usually goes. With earnings winding down somewhat economic report-wise, on Tuesday we'll have the Empire Manufacturing and retail sales. We all know how much retail sales, how much fun that's been lately. On Wednesday, we'll have building permits, housing starts, and our usual crude inventories. On Thursday, our usual jobless claims, the Philadelphia Fed, and natural gas inventories. And on Friday, we'll have the Michigan Sentiment Report. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading skills, stay on the safe side of the market right now, and raise your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.